Welcome back to the show, everybody. Check these headlines out here. We got the Digital Dollar Project warning the U.S. here. And have we become a bailout nation? Senator Warren is talking. You need to hear it. She's calling for Michael S. Barr to investigate and for Jerome Powell to recuse himself. You're going to want every bit of it. Banks are bringing systemic risk to crypto, but maybe it's not just banks. Then we're going to talk about this. Jeremy Allaire says they got the safest digital dollar on the internet. SEC versus Ripple. Supreme Court before Congress acts. Say what? And we've got this. XRP technical analysts are talking. Is it 33 cents or 58 cents for XRP in our near term? Somebody roll that beautiful intro so we can find out.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow us on TikTok, YouTube, and Twitter for exclusive content. Right now, $1.17 trillion market cap for crypto. The market is up 11.8% in the last 24 hours. Bitcoin right now on a tear. It's up 15.8% in the 24-hour time span and $26,000 slightly over. Right now, 1746 and change for Ethereum. That's up 9.8 on the 24-hour, 11.4 on the 7-day. 73.1 billion plus in the Tether market cap, and XRP is 37 cents. We're up 4.7 on the 24-hour and 2.3 on the 7-day. Let's get into this, ladies and gentlemen. It's Jason Cousins from Glint, baby. He says this, and I tell you, what a time to hear it. Can you imagine if a bank was clear, fair, and not misleading? Your money is at risk when deposited in a bank, as we only keep 12% of client deposits ready for withdrawal. We lend and invest the rest to try and make a profit. Therefore, we might have enough when you want it. Check out GlintPay, he says, where client gold is allocated gold. It's your gold. It is physically allocated to you, legally owned outright by you, and unlike fiat currency held in banks, is never put at risk through lending. And you can still spend it when you want using the Glint MasterCard and app. And there will be a demonstration coming up on the new app and all the new features tomorrow. Make sure you tune in to Glint Pay for that. And check out the link to the sponsor and see if it's right for you. I absolutely love it. Crypto Law says as Gary Gensler and his allies launch the all-out war on crypto and Senator Warren tries to FUD crypto to high heaven, Bitcoin is up big and just overtook Meta in market cap. And we know the price, we just went over it. And that is something going on. But let me tell you something. Let's come back to the less speculative side. And let's come to the, what are you going to do to make this new asset class really regulated? Well, it starts at a foundational level, and that's custody. And that's exactly what they're doing at PolySign and Standard Custody. I want you to listen to this clip right here.
PolySign is an early-stage fintech company.
We're providing infrastructure for institutions to access digital assets. And we also have a bit of a skunk work project called AtomicNet, which is really a play into allowing settlement of a broad range of digital asset transfers. The future that we think is actually quite bright, that has a lot of momentum behind it right now, is around tokenization of traditional assets. So it could be a private company share. NASDAQ has an initiative around NASDAQ private markets, where rather than investing in a traditional equity or venture capital like approach, you could actually have a tokenized interest, a fraction of our company that could ultimately trade on an exchange. And it's something that we've been talking to Joe and the folks at Link2 about.
If you're somebody that believes in the future of the digital asset space, but also believes that there's some incredible infrastructure that's necessary to make that space grow and have institutions adopt it, then take a look at PolySign, because you'll
Absolutely. And I tell you, you can't say it any better. And I'm excited to have both of those gentlemen as a part of XRP Las Vegas. And if you haven't got your ticket, I'm telling you right now, the days are counting down. It will sell out. Do not wait and become that person who goes, man, I can't believe it's sold out. Get the link underneath the video. Check out them and Link2 for PolySign. And don't forget Ripple, private equity on PolySign, on Link2 as well. I don't mind telling you. You want to look. How much longer is that window open? We're about to touch on the SEC versus Ripple case before we get out of here in this video, and I'm reminding you, if you want it, how much longer are you actually going to be able to get it? That's the question. Digital Dollar Project is warning the U.S. cautious approach to CBDCs could put them behind. The DPP laid out a series of warnings about the United States cautious approach, calling it a conspicuous absence and an unsustainable position. Such a defensive posture by the U.S. threatens to impact its domestic economy if foreign nations issue their own CBDCs that become widely adopted as the de facto standards for international wholesale and retail payments, the paper warned. Additionally, the CBDCs of other nations could be used to avoid financial sanctions, making it imperative that the U.S. find ways to maintain the dominant use of the dollar in the digital global payment system. If the United States-led global financial infrastructure is perceived as too slow and expensive in comparison to foreign alternatives, a potential threat as other countries rapidly explore their version of central bank digital currencies, it's possible other nations will begin or continue the process of de-dollarization. That's what we're dealing with, ladies and gentlemen. And this question put forth to Patrick McHenry here from the House of Representatives, the Financial Services Chairman here. Listen to what he has to say when he's asked about, have we become a bailout nation?
How do you think about just the idea in the SVB instance that depositors were made whole in the context of firms that are venture capitalists, people who have CFOs? Where does the personal responsibility start and stop in all of this?
There is a large amount of personal responsibility the American people should take, yes. But at a moment like this, where you have people making grand assumptions about financial institutions, to make the appropriate statement here that your deposits are safe. Look, I can tell you, as a matter of history, depositors are made whole in the United States. The FDIC has resolved over 500 banks in America, and we haven't seen a loss of depositors' cash. So I can tell you the history of that. Now, these folks that are heading these agencies can only tell you the law and the regulation. They're not in the business of speculation. And I'll tell you, there are also these rumors going around that these agencies won't act in accordance with the rules and law, and that's not true. I talked to Marty Gruenberg, who's the chair of the FDIC, last night. One of the rumors is going around that he's not willing to sell financial institutions, which is patently false. He has assured me that he is ready, willing, and able to take any willing and capable buyer of these institutions to protect our financial system.
The question is whether we've become a bailout nation. And when you hear Ken Griffin's comments about he's watching capitalism dissolve effectively in front of his eyes. We did it after 9/11. We bailed out everybody after 2008. The pandemic happens, we bail out the airlines and everybody else. Here now we're bailing out at some point, should we not do that? And if we are going to do that, does that change the dynamic with which we think about taxing Americans? Should taxes be considered a form of effectively insurance for everybody? I mean, how should we think about this?
You know what I think we should think about is what we're what today is. Today isn't making sure that American people have confidence in their financial system. We have politicians dancing around in a hackish way, trying to drive their own agenda. We have folks that are opining so that they can actually have a greater platform. And what we see is people trying to dine on the bones of America, and I think that's highly irresponsible. At a moment like this, we should understand what these agencies...
Okay, it goes on, and then it's actually political posturing from there. But this is what I want to show you here. Take a look at this. Now, when they talk about the idea of the full faith and confidence of the FDIC, look at the FDIC's balance sheet below. The FDIC only has $125 billion, securing $9.9 trillion. That's only 1.26%. FDIC may be able to protect the depositors at SVB, but it won't be able to do it if it happens to a few other banks. There's your numbers right there. Insured deposits, 9.9 trillion. Fund balance, 125.5 billion. Things can get out of hand very quickly. And I tell you, it is something that should be disturbing to all of us. Fractional reserve lending should be coming to an end, and it's the only way to really transition the system, to be honest, from a debt-based system to an asset-backed system. And it seems like we may be starting to take on that fight. However, it is right here, none other than Senator Warren, shared by Meta Lawman, who I'll be sitting down with soon. Fed Chair Powell's actions directly contributed, says Senator Warren. Fed Chair Powell's actions directly contributed to these bank failures. For the Fed's inquiry to have credibility, Powell must recuse himself from this internal review. It's appropriate for the Vice Chair for Supervision, Michael S. Barr, to have the independence necessary to do his job. Meta Lawman says here, Senator Warren says it's appropriate for the official in charge of supervision at the Fed to investigate the failures of supervision at the Fed. This is not a posting from a parody account. It is what passes for accountability in Washington. Absolutely right. And former Ripple advisor Michael S. Barr, that was mentioned here by Senator Warren, is going to lead the review of the SVB supervision. And everything here will be monitored. We need to have humility, is what's said here, and conduct a very careful and thorough review of how we supervised and regulated this firm and what we should learn from this experience, Barr said, per the Fed's statement. While SVB largely served as a lender to tech startups in the region, it bears mentioning that it also serves some big names with significant crypto involvement. These include Circle, Ripple, Andreessen Horowitz, as we all know, as highlighted in previous reports. And uncertainty surrounding the wholeness of Circle's USD coin reserve caused the stablecoin to lose its dollar peg over the weekend. The FDIC had opted to back all customer deposits in the bank to prevent a wider panic and a run on otherwise healthy institutions. As reported yesterday, pundits have blamed the bank failure on investment of deposits in long-term securities and failure to hedge against the Fed rate hikes. The plot thickens here. Jeremy Allaire says here, moving to a full reserve digital or dollar digital currency is our best hope to insulate the internet financial system from the systemic risks embedded in the fractional reserve banking system. This is a fantastic point, and it's true. This is why I had so much trouble understanding why Custodia Bank was turned down. That's exactly the model that they were pitching. John Deaton says here, banks are bringing systemic risk to crypto. Yeah, and I would offer an expansion to that to say governments are bringing the systemic risk to crypto because they've allowed the banks to do fractional lending. They allowed all the downgrading to take place, knowing full well that it would create a cascading effect here. I think it was intentionally done so they could take over and control the 2-3 main sources of where crypto does its banking broadly. And I say yes, sir, to John Deaton. And FSOC is the oversight. Come on in. FDIC, as we went over in this morning's video, and the Federal Reserve are 2 of the 10 members that sit on FSOC. And systemic risk, systemically important, are the phrases you want to continue to listen for because they're the ones that you're going to continue to hear because it gives the prudential regulator a reason to act without Congress. Circle's calling on Congress to urgently pass stablecoin legislation amid the SVB crisis. Now, we may get stablecoin legislation, but it won't be crypto legislation. That much I can guarantee you, and he's not the only one. Now, this is Jeremy Allaire talking right here. And it's a great clip, but I've got to keep it moving here just for time's sake. I don't want to get too hung up. But this is really a call. He says essentially they have this. He believes they have the safest digital dollar on the internet, regardless of what took place over the weekend, because they had the ability to make anyone whole that lost out, and they would have done it out of their own personal holdings to make it right. John Deaton, let's turn and pivot now, because we know any day we're waiting for a decision, some kind of a ruling or a settlement in the SEC versus Ripple. John Deaton says the Ripple case could get to Supreme Court before Congress acts. Why, I remember a day everyone was shooting me down for even mentioning the Supreme Court. But yet this is a very, very real possibility here. And basically what is said here is, for context, is in the case of district court where it would need to reach the Circuit Court of Appeals before it can reach the Supreme Court. The crypto law founder expressed this view in a tweet where he said it came in response to indications that the SEC had no plans to put the brakes on its accelerated crypto enforcement efforts. Eleanor Tarrant, Fox Business journalist, shared an excerpt of the SEC's latest budget proposal. Notably, the agency emphasizes that it will not hesitate to investigate and launch enforcement actions against crypto firms it deems non-compliant. According to Tarrant, this indicates the regulator would expand its crypto enforcement unit, which doubled in size in the past year, and they're calling for more budget and more proposed budget increase so they can make it even bigger, just as a side note to everybody. John Deaton said here, hell, the Ripple case could be heard by the Supreme Court before Congress acts. We must fight in the courts. And what he says here is so important because he has said it for 2 years. Clarity comes from the courts, not Congress and not the SEC. It's not the way it should be, but it's the way it is and the way it's going to be. And that's why it could go there. But if it does, keep this in mind for the ruling we're waiting for, plus a possible Court of Appeals and a Supreme Court run if it goes that far. Remember, Jeremy Hogan said this, that in the understanding of what the judge in this case has done so far, Judge Torres may have already decided whether Ripple's native XRP is a security or not. Following the court's decision on the Dahlberg motion, Jeremy Hogan tweeted that the court's recent Dahlberg motion ruling suggested that Judge Annalisa Torres has already found the answer to the question that whether XRP should be considered a security or not. And it leans into it not being a security because of the Marine Bank v. Weaver case. And it was cited at least 3 times by Judge Torres while discussing the matter of regarding XRP holders' intent and expecting while buying XRP. Hogan stated that the Supreme Court particularly evaluated when things are sold or should not be considered a security, and that is why there is a leaning in that the Judge Torres may be already decided in her mind at this point on the fact that XRP and XRP holders are not holding a security. This gets interesting, but now we wait, as Jim Filan has told us, and we are waiting patiently. And while we wait patiently, let's take a look at some technical analysis here from different people in the space. This here is Precision Trade 3. Shout out to Tara for this one. Next stop for XRP is 57 cents. This should line up with the BTC Wave 3 at 35,400 plus. Wave 3 likes to extend, so especially if we get heavy volume, bullish targets can reach as high as 83 cents on this wave. I'll keep you updated. Right here, the chart, however, even though she's comparing XRP to BTC, is XRP to USD chart, right? Just showing the move here. But what's interesting here is if we go to EggRag Crypto, who we call on quite a bit on this channel, shout out to both of them for this information. It says the XRP Fibonacci speed resistant fan says, I'm following the FSRF. Since September 22, XRP is struggling to close above the 0.25. Chart 1 is presently presenting daily, but Chart 2 provides the answer, and it says closing above the FSRF. Weekly candle is the official start of a run. So here's our wake-up line. Now, what's interesting is last line of defense has us down here at around, 28 cents or something, but nevertheless, it shows in the zooming range, and we are still within that range. We could dip back down to 33 cents and test that area. So look, we don't know where these things will go, and I think broadly we're waiting for a ruling in this case to really understand where they'll go. But what would it feel like to you? Because I certainly know what it would feel like to me. It would feel surreal to get a ruling that clarifies that XRP is not a security and not a security for XRP holders to hold it, and to see it relisted on all the crypto exchanges while we're in the middle of a regulatory melees. Imagine what that would look like. Not financial advice from me or anyone else. It's just my digital perspectives. I'll catch all of you on the next one.